When all seemed hopeless and everyone thinks that the market is going to die, the market staged a really strong comeback later in the week on Thursday and Friday, closing up with semiconductors and a lot of the tech stocks being up massively yesterday, with short squeezes like MVIS, which we did took advantage to day trade here and there because, just to be clear, I'm not really a day trader, but I do day trade when there's an opportunity and when I do have the time. So Palantir was another one as well. TIGR was another good swing trade and day trade opportunity that we have during the week as the market closed higher. Okay, the market right now is at an all-time high. Okay, again, Dow Industrials up almost all-time highs after a choppy range market. Nasdaq's also almost at all-time highs, consolidating in the 13,750 area to the 14,000 area, and the SPX large caps is also back at the all-time highs after Friday's strong close. So where do we make of the market from here? Where? How do we make it? Is there any other opportunities that we have to swing trade? So historically, based on history, right, April and the last week of April is staged to be a strong rally and momentum into May. So history has happened before, doesn't mean that it will happen again, but it do give us a good indicator of sometimes what it may happen in the future. So we shall see the last week of April whether it might rally or not. Now let's look at last week's, just a brief update on last week's picks, right? AMKR, MCore, Semiconductor Play, SSP, and ACLS. Okay, I'll touch on those a bit more detailed after the top 3 swing trade stocks for this week. And all of them did pretty decently, right? Around 3 to 4, 4 to 5%. But however, okay, that was nothing compared to the sudden rally of technology, okay, which we might play this coming week. So without further ado, right, let's jump straight into the top 3 swing trade stocks for this coming week. For those of you who don't know who I am, okay, I am the Stock Estate. Okay, welcome to this estate to chill and we talk about stocks. And here we learn how to swing trade as well as manage our risk during our swing trade. And the objective over here is to learn and to manage our risk, because only by managing our risk you are able to position size properly so that you will not sustain huge losses and be a consistent and long-term profitable swing trader. Now, let's talk a little bit more about the first company that I'm looking at for this coming week. And the first company is actually CHPT, ChargePoint company. ChargePoint, what's so special about this company? Okay, ChargePoint is one of the largest EV charging station companies right now that's on the public markets. And after a disastrous rally downwards right after its spaq IPO per se, okay, it's gone from its all-time highs from $32 all the way down as low as $19. Okay, that is a huge drop, right? So a lot of people who bought in over here thinking that it will rally up high, right? Okay, got dumped. Okay, and since then, okay, I've been keeping a very close eye on this company to see whether there's an opportunity, whether it found a bottom. And in a sense, after this week's rally, right, we did found a bottom. In fact, there was 2 bottoms. So let's take a look at the 1-day time frame first. What I'm looking at right now, just now you're looking at, was the 1-hour time frame. And the first, we look at the 1-day time frame, right? Okay, when we look at a 1-day time frame, what do we want to identify? So again, whenever I go into a swing trade, I want to look for a this. Okay, so this is a, you will see this, my old subscribers will probably see this quite a few times already. This is the stock estate trading LATE format, something that I use every single time when I want to go into a swing trade. Again, I suggest you have something like that. Okay, if you don't follow mine, it's fine, but you should have some kind of a plan that you have to follow every single time to make sure that you're consistent over the long term. So first one, LATE, when we look at the big picture, which is the 1-day time frame for swing traders, right? I want to look at the long-term trend, the area of value, as well as draw some support and resistance areas that, when we go into the lower time frame, we might not be able to pick out. So now we look at ChargePoint, the first support and resistance area. I'm going to draw it out right now. Okay, I'm going to draw the lines. Okay, so again, the first one very clearly, okay, you can see it got touched once, okay, twice and thrice over here. Once, twice, and thrice. Can see? Yes? All right. So you can see that there was a very strong bottom over here at around $19.60. There's a very strong support where there's a lot of buyers stepping in this area to buy this company up. So again, this company, although its fundamentals are not really very strong yet because there's not a lot of data on its cash flows and everything yet because it is newly IPO, right? So but again, since it's one of the largest charging companies there, a lot is expected out of this company. So again, this shows us that the market thinks that, okay, anywhere around $19 to $20, okay, it is a buy right now. Okay, so, and since then, it's rallied up again, downwards again to this support area, and since then showed a bounce. And where is the long-term trend? Now let's look at the long-term trend, right? Okay, the trend is our friend. Okay, so we don't want to go against it, right? I want to look at the overall daily time frame, right? It's still in a upward momentum. So again, from its lows, right, of $10 in a sense, right, it's still considered in an uptrend. Okay, it's still considered in an uptrend. Okay, and it is still considered quite bullish. Although, okay, right now we're taking in a kind of a counter trend trade because since its highs, right, it has been rallied downwards a little bit more. So we have to be a little bit more cautious when it comes to a counter trend trade. So in this sense, trend was our friend, but right now after it broke below the 100-day moving average, right, in a sense, the trend is kind of a little bit weaker now. So again, we have to take quick profits on this one. So this is how we analyze our stock itself. So area of value. Now let's take a look at area of value. Area of value now is trading near a moving average, and coming Monday, we want to see it close strongly above the $25 area. Then we'll take a position to swing it up to potential, maybe $31, the next resistance area. So now we take a look and we draw the next resistance area line. Okay, very clearly, this is the next one. Okay, we want to have as many touch points as possible. 1, 2, okay, 3 over here. So again, the $31 is the target resistance area where sellers will step in to sell this company, or the potential short people, right, will actually come in to short the company at this area itself. So this is the major support and resistance, as well as the area of value being around $24, around there. And the area of value can be a support level at $19. So now we look at the lower time frame. So after we look at the overall big picture, we want to go to the specifics so that we can set a tighter stop loss, as well as, set our exit plan and look at the very specific price movement in the company. So 1 hour time frame. Okay, let's look at the 1 hour time frame. 1 hour time frame, you can see that again. Yep. So this is a little bit more closer. We look at it a little bit more closer. So again, you can see this 20 moving average over here, the yellow line. So it's been trading below the 20 moving average. Every time it hits, okay, got rejected, hits, got rejected, then it crosses. Okay, so whenever it crosses a 20 moving average, then we gotta be more, we should keep our eyes a little bit closer to this company. So eyes is on this company right now. Okay, it crossed the moving average, but sometimes it crossed a little bit and it just bam, back to the downside. But no, in this case, it crossed. Sellers are trying to sell it back down, but again, it hit a certain area by refusing to go below the 20 moving average. And yesterday's rally was a 10% up rally, boom. Okay, and a lot of sellers try to sell it back down, but however, okay, buyers are stepping to buy this up again. So again, this area here right now, right, when you look at the closer area, this area is actually an area of value. Okay, it is an area of value. So what I want to look at, okay, so let me just draw it out for you over here. Okay, this is an area of value right now. This circle area is an area of value. And what we want to do with this, okay, around here, okay, we can actually set a very, very nice stop loss. Okay, let me bring out my doodle over here. So now let's reference back to this. Trigger to enter, right? Trigger to enter. What is the trigger to enter for next week? Okay, in fact, next week, okay, if pre-market didn't really move much, okay, it didn't dump very heavily below the 20 moving average, or it didn't spike up too massively, right? Then actually, okay, I will take a position. I will already take a position, okay, around here. Next candle open, I'll actually take a position over here because it is forming a nice little consolidation near the top over here, showing that it might actually break out further next week if the EV hype is still there. So stop loss, right? Actually, we could give it a little bit of room. Okay, so again, where is the previous swing low? So you see, this is a swing low. This is what I mean by swing low. So swing low means the sellers are trying to sell it back down and hit an area where the buyers step in. So this is a swing low over here. Okay, so if you want to be more conservative, right, you can see this handlebar over here. This is a swing low. So again, your stop loss could be around this area. Okay, so this is the area for your risk. So this area is your risk, right? Okay, this is represented by my very ugly frowny face. Okay, so this is your risk. Okay, and potential reward. Okay, potential reward again. Okay, you can swing it up to the further upside. Okay, so again, any major resistance area, right? You can see this area over here, this area. Okay, again, this area. Forgive my ugly drawing, but okay, this is pretty straight as well. So this area is an area of resistance. Okay, this area, okay, is an area of resistance. So anywhere from here to here, you might want to take some profits off the table. As it goes higher to the upper range, right, you want to take more and more profits. So again, this is where area potential people might step in. So again, very safe area to take profits at. Very, very safe area is this area. So this is your reward. Okay, so again, this is your reward, this is your risk. Okay, now let's take a look, right, at what is the area. So again, we're stepping in at what prices? $24, right? So you're risking around $24, you're risking around $3.50. No, I mean $2.50 for a potential 24 to 28. Okay, no, 29. Okay, so a potential around $5. Okay, 150 for $5. That's a good risk to reward for you. That's around, I think, 2 or 3 risk to reward. So that's actually a really decent reward. And also, it could even go higher because I'm looking at a very conservative resistance area over here. It could go even higher, 30, 31-ish. So again, this is a very, very nice trade setup that I would look at. Okay, so this is, again, referencing back to my exit strategy, right? So trigger to enter, I told you, was a next candle that holds above that level to another consolidation bar to go to the next one. Exit strategy. Stop loss, I just told you, okay, as well as my profit-taking area. So again, whenever you go into a trade, you gotta have a clear trade plan, clear exit plan of where you want to go. Then you are able to, maximize and have a clear hit when you go into a trade, because you never want to, hope and pray that the market gives you what you want. Okay, sometimes it just might not give you what you want, and you have to, suck it up and take it with caution. And additional thing, right? It's also important to take a look at the market and how it is on the next week itself, because now everything's at all-time highs, as I said, right? So if everything's at all-time highs, you got to be very, very careful and do not hesitate to take some profits off the table. Because example, right, if the next week's market, right, SPX and everything, right, rallies to its all-time highs, XLY, everything rallies to its all-time highs, right, to its maximum. Okay, and there's a very high chance that it will reverse. So when it hits an all-time highs, okay, you gotta be very, very careful in relation to the overall markets. That's how the overall markets affects our swing trades. So when the overall markets rallies for next couple of days, so for example, Monday, Tuesday rallies up to all-time highs, green again, massive green, and you're up a lot on charge point and everything, right? Then when it's looking at all-time highs, okay, again, be a bit fearful when everyone else is greedy, okay, take some profits off the table, cut half the positions, okay, and anticipate and prepare for a potential market pullback. If you don't know how to analyze a overall market pullback, go to my stock estate channel. Okay, right here, this is the stock estate channel, right here. Okay, you can how to look for the signs. Yeah. I will teach you all. Yes. Okay. So the first one over here, you can already hear my voice. This is the overall market pullback video, and this video would actually help you, to identify wherever the market's at the top. Okay, and how you should be a bit more cautious when it comes to overall market analysis. So go over there, go to my playlist as well. I got a lot of tutorials for you, swing psychology, long-term investing, swing trade tutorials, short tips, and a lot of things. Okay, these are very, very important videos for you to look at if you want to learn more about swing trading. So now I talked quite a little bit about charge point, right? Because I set up the risk to reward ratio, everything very well done, and how I would do it, okay? And again, how you would do it is up to you, because it's up to your risk management, okay? How up to your, your risk tolerance, how much position size you want to size in, okay? So this, a lot of things, right, depends on you. So again, you have to craft your own exit plan, your own strategy, okay? Don't rely on anyone else. So after looking at this, okay, I want you to reference this, right? And apply what you have learned, in a sense, in this first charge point, right? How am I trading this, okay, to the next 2 companies that I'm going to show you. So next 2 companies I'm going to briefly run through, because I don't want this video to be 1 hour long, right? So next company I'm going to talk about is actually Beam, okay, B-E-A-M, Beam Therapeutics. Okay, Beam Therapeutics are in the genetics industry, again, the genomic revolution, and this company has a lot of good things coming for them, especially you can see a lot of highlighting ability to rationally design base editors for precise editing. Okay, so they are doing a lot of things that are very, very useful for it's their company, a lot of research. But as with biotech companies, they need to pass their FDA approvals, a lot of things. So, but if they do, it's going to rally up massively. Okay, and in fact, ARK Invest or ARKG, right, has been investing in this company quite a little bit, and I'm an investor in ARKG as well. So, Beam Therapeutics, I pretty like this company actually. So, we look at the 1-day time frame, right? 1-day time frame over here, we can see that. Does it look similar to Mr. Charge Point over here? Yes, okay, something like that, right? So again, it has been rallied up, then it kind of died, but since then it has kind of found a supposed bottom over here. So if we draw it out, right, bam, bam, yep, supposed bottom over here at around $65. Then since then it has popped above this moving average again. So this area, okay, again, I want you to reference to charge point, how I did it, right? And, try to apply it to BEAM, and, comment down the sections below, what is your trade plan, what is your stop loss, what is your profit taking area, then I'll be glad to take a look at it, and see what you guys have to offer, and give your reasons why. And, I might even learn something from you. Okay, so again, we are a community, we want to learn from each other. Okay, there's no right or wrong in trading. Okay, that's just how you manage your risk, what's the thinking and rationale behind it? Because after all, okay, as long as you can be a profitable and consistent trader, right? And you're profitable over long term, in a sense, what you're doing is kind of right, isn't it? Right. All right. So what we're gonna do is again, see it's popped up over 20 moving average over here since yesterday, right? One day it popped up. Okay, so it may signify a start of a new trend. Okay, you identify the potential tops and where you want to swing trade to, where your stop loss is, where your exit strategy is. BEAM. Okay, very similar charge point. I do not need to elaborate more. Okay, next, the third company I want to look at is actually HIM. HIMS is a semiconductor company, and semiconductor companies are actually pretty decent as well. Again, last week, I talked a little bit more about some semiconductors, whether they have actually some potential to swing it to the upside. Okay, and I think this week might be a monster week for a semiconductor. So again, we might see how does it run to. Okay, 1 day time frame. Okay, I won't say super similar, but you can see there was a bottom over here at $11. Right now it's at $13. Have potential to go to the next support level at $15 area. So again, this is a shorter swing trade. Okay, the risk to reward isn't a lot, but again, there's not a lot of resistance, right, to prevent it from going to the further upside. Okay, and I can see definitely this has lesser resistance than the other two, okay, to swing up to the upside. But however, the downside is, okay, the reward isn't as much. It's only around $1 reward. So again, it depends on your risk appetite. Okay, so if you are willing to endure the drawdowns, right, and the volatility a little bit more, but for more profits, okay, charge point and BEM may be for you. HIM, right, okay, if you are very conservative in taking just 3 to 4% profits, right, and run, you want a quick 3 to 4%, okay, I think HIMX is very doable, okay, especially if you look at the 1 day time frame. Okay, this area to next day area, okay, I think it's quite easy. There's not a lot of resistance over there, as long as the market continues to rally a little bit higher next week. Looking at the 1 hour time frame, you can see roughly the same thing. Okay, again, rally popped above the 20 moving average. If not everything goes well, I think can pop up to $15. But again, if example next week, Monday, pre-market, it goes to $15, then is this a valid trade anymore? No, it's not a valid trade anymore. So there's no point trading this if it has already run up pre-market. So again, that's why I provide 3 companies so that you have a few to choose from, as well as some of them might become, in a sense, invalid when Monday comes if unfortunately pre-market takes all the profit out of the trade, right? So that's why I provide 3 of it for you. That's it for the top 3 swing trade stocks for this coming week. And I'll actually be releasing another video, right, talking about 1 or 2 more that companies that have a bit of potential as well, but I'll have to see if I have time to do that because I've been really busy these days, everyone, with my full-time job and everything. But swing trading, again, that's why I said swing trading is kind of a easier thing to do because we do our research on the weekends and we just need to execute our trade plans, during the day, on the weekdays itself. So we don't have to stress too much about it. Okay, day trading a little bit different, but day trading is good for some extra income, but day trading is only for you if you are very sure of the patterns and you are already quite an astute swing trader. So I'll say swing trading helps you in day trading a little bit as well. And yeah, so let's talk a little bit more about last week's picks, right? A quick glance through about what's going to happen. ACLS, right? Okay, so here was Monday, right? Okay, 20 April, Monday was here. 19 April was Monday. Okay, it kind of dipped a little bit. Okay, then we don't want to enter, right? I remember I said we don't want to enter. Then after that, it popped up massively, right, to around $42 level, right? So it shows a change in trend, right? So from there, took a position, swing trade to right now around $43, from $42 to around $42. I remember I took a position around $42 to right now it's around 3.75% profit. So decent, okay, decent, but I do admit that, okay, it wasn't as awesome compared to some of the super parabolic companies. But again, for me, it's about the consistent small profits. So again, if you like this kind of consistent small profits, not over risking yourself in very high place, then again, I think this channel is for you. So semiconductors, ACLS, around 3+% profits. SSP, very solid company. You can see this is literally a straight line, right? Okay, it's a straight line. So again, I called it out last week, right? And Monday, it opened up, okay, it consolidated, it crashed, got stopped out, okay, but after it took a position again when it recovered from here all the way to over here, it's around 4.26% profits. Okay, decent for SSP as well. And last one is Amcor Tech. Monday crashed. Okay, Monday everything crashed. Okay, everything kind of died. Tuesday as well. Then when it popped up massively around here, took a position. Okay, this is this is not really a winner. This is like a very volatile, okay, very good for swing trading actually. So again, if you can swing this day trading, right, you can day trade this area and day trade this area, it will be actually a quite profitable company. But again, if you are just holding it throughout the entire area, it's probably around a 1% trade for you. So MCore was it's an ad trade, but the other two was pretty decent. So that's it for today's video. Okay, I hope you learned a lot from today's video, and I hope to see you again in next video. Telling me, what have you done? Okay, what are your swing trade plans? Okay, and what are your feelings about the overall markets in general? Okay, are you feeling nervous? Are you feeling a bit fearful? And are you even keeping a lot of a long-term portfolio in? So again, long-term investing wise, right? Again, as I always said, right, in my previous videos, okay, what I personally would do is I would put around 20% or 10 to 20% of my capital, right, or my entire portfolio, free as cash. And that cash portfolio could be used to swing trade, day trade, or whatever, because those are protected by stop losses. So if anything the market happens, right, it crashes, I'll get stopped out. At least I'll have that capital, right, around 20%. If I got stopped out a lot, right, maybe now I'll be left with 18% of my capital, right. And that 18% will be used to average down my long-term positions. Okay, so for example, if everything crashed, then I'll be using it to buy my favorite companies like Teladoc, okay, Neo, Rocket companies. Again, those are my three biggest personal holdings. Again, and I'm very excited by Teladoc's its earnings as well. I'm really looking forward to it on 29 April. I think it will rally massively after that, but that's just my opinion after my own research. So I'm just looking forward to that as well. So again, I hope you enjoyed the content. Okay, I shall see you again in the next video. Stay out.